Welcome back to my YouTube channel. First step to the investing journey is to save your income. But you all know saving is not that easy, especially in the current environment where we live in. The inflation has gone up, cost of living is unaffordable, cost of grocery has gone up, gas prices have gone up, interest rate has gone up, so you're paying more for your mortgage, rents have gone up. It is natural that most of us end up living paycheck to paycheck. But then can we then conclude that saving is not possible and give up? Because think about it, we don't have any control on inflation and raising cost. Or is there something we can all do to be a better saver? So in this video, I'm going to analyze why saving is so difficult for people in North America, developed world, and provide practical money saving and investing ways on tight budget that I learned from my mom. So stay tuned till the end of this video. Like and share my video if you like, and comment for what you feel. Why saving is so difficult? Let's analyze it. When this is the global income distribution chart. Y-axis represents the size of the population, X-axis represents yearly income per person. You can see most of the country, the people, they live below the poverty line, which is this line here, $456. That's how they earn per year. And almost 75% of the world population earns little over $2,000. And only 10% of the population make more than 60,000 a year. So you can clearly see many people in the world do not have adequate disposable income that helps them to save. However, that doesn't mean that they shouldn't or cannot save. As you saw previously, many countries around the world live below the poverty line, right? And almost 75% makes close to $2,500 a year. This people includes mostly from India and China, as you can see in this graph clearly, right? But when you look into the gross savings rate for each country, so this is the savings rate in the y-axis and the country in the x-axis. You can see even though most of the people in China and India are either below the poverty line or make close to $2,000 to $2,500, you see they are the great savers. See, Indian people save around like 30%, little over 30%, and in China people save around more than 40%, which is incredible. So what is the takeaway from this graph? In low income, it is possible for one to save. Before we go further into understanding why people in North America struggle in saving, we need to understand what is the saving rates by age recommendations are. So this is the graph that explains savings benchmark by age as a multiple of income. So they show various ages and saving benchmarks as in a range, and this graph shows the midpoint of that saving range. So as an example, by age 30, they want one to save half of their annual income. Similarly, by 45, 3 times, 50, 5 times, 55, 7 times, all the way to 65, 11 times. Another issue when it comes to savings for people in North America is as the income grows, the expenditure also grows with it, right? You can see clearly the expenditure is growing, right, as the income grows. Now, this is the chart that shows income versus expenditure for various age group for 2013. We will take this one for our discussion, right? So, for example, if you are someone who is age 25 and you are living in US and you're making around like 50K per year, and let's say if you go with a savings rate of 9% that we saw in that previous slide, you would save almost like close to 23K, right? Like if you add this all up, it'll come to around like 23K. It's very difficult for one to save that benchmark. Forget about beating it. As you get older, by 25 to 35, lifestyle is changing, your you're increasing you're settling down. So therefore, like, the expenditure will also grow. So the savings rate will become even worse. So what is the way forward on this? So therefore, the only way to get started and saving is to keep the lifestyle and expenditure constant and increase your income, right? This way, like, in coming years, when your income is increasing, your expenditures are almost the same. So what is going to happen is that portion of savings, you can basically increase your savings. So long story short, if you want to save, first practical tip that I want to give it to you on saving and investing is hail frugal living. The next practical tip when it comes to saving and investment that I learned from mom is, once you practice frugal living, you should practice delayed gratification. Famous Stanford marshmallow experiment, where what they did was they asked people, do you eat your marshmallow directly or do you wait 15 minutes to get second relate this marshmallow experiment directly to finance. So you get the paycheck, you can right away spend it, and that's it. Or once you get the pay, you don't spend for everything. You just plan it in such a way that you only spend for your needs and save the rest. This way, the money gets gratification double. Also means you save for your wants. You don't go and buy out right away, right? So some of the financial examples are like, you can go and buy that food you're craving, expensive restaurant right away, or you can save it. Some people, they just go, once they get their paycheck, they just go and buy some unwanted items. You take that money, excess money, and you basically invest rather. If you've been watching Netflix, Amazon Prime and whatnot, it's okay, entertainment is okay, but like some people have like so many subscription. I don't know how they cancel some of those unwanted subscription and then put that money towards your future goals. You can save that money, or instead of watching those videos, you can start your side hustle and work on it, which will give you the extra money that you want. Keep in mind, personal finance is all about, is mostly behavior. It's just the mindset, guys. So if you follow delayed gratification, you can enhance your saving. Thing when it comes to the next practical tips on frugal living is shop around. Shop around for your internet, phone plans, grocery. Try to find deals. That's important. The next thing is, try to subscribe in a program such as Roundup saving programs. I don't know where you are, where do you live, but like, for example, let's say if you live in the US, there are financial institutions like SoFi and Acorn. They offer Roundup savings program where, let's say, like if you buy a coffee for $3.27, and when you swipe your, credit card or debit card, it will round up that 73 cents. So it will be like $4, but that 73 cents will go towards your savings account. Savings or investing. Depends on the firm. It will go to your savings or investing firm. Same thing in Canada. I'm from Canada. So in Canada, Questrade offers Roundup savings program. Okay, my final practical frugal living method on saving and investment is cutting your expenses. You all know, if you don't go eat outside regularly, make your own food and brew your own coffee, you can save a lot of money, guys. Once you cut down those expenses, you can buy actually a fraction of shares. So what is fractional buying? Let's say you don't have a lot of money at your disposal. Guess what? Lot of financial institutions around the world, for example, if you are in US, you have Acorn, Vanguard, Robinhood. They all allow you to buy fractional shares. So for example, I'm in Canada. Let's say if you have Wealthsimple account, if you have only $20 a day, like $20 you can save in a day, You can take that $20 and you can buy fraction of this Vanguard S&P 500 index ETF. You just take that $17 a day that you saved, and then if you invested over last 2 decades starting from 2003, right, $17 a day, which is close to $500 a month for next 20 years, which is 2023. So your invested capital is around 120K, but the return would have been 375K based on the S&P 500 performance for last 20 years. So think about it. That means you made a profit of around 255K just by cutting your expenses on food and that coffee, like $17 a day, and investing that fractional share on S&P 500. You are able to make 255K profit. Now, confidence or determination to save that money, to make your own food, make your own coffee. And guess what? If you do that, there is no rocket science here. You're not asked to invest in like some fancy stock here and there. Just pure vanilla index fund, S&P 500, you right away you see there is a profit to make. Even though the past performance are not guaranteed, but in general, you would do good for yourself. So thanks a lot for watching this video. I hope this video adds value to you and your family. And if you like for what I said, subscribe to my channel, share my videos to others if you like it, and comment for what you feel. If you don't agree with what I say, comment. No problem. Thanks a lot for watching and thanks for your time.